Hello, everybody. I wanted to come and do a short video on how to trade the gap. Some of you have expressed your desire to do some gap trading. You want to learn how to do the gap fill. So I want to take this time and show you how to trade the gap. So the first thing that we want to do is define what is a gap. So a gap is any space that you see between prices. So for instance, right here on the daily time frame, we have a gap between this price and that price. Let's see if we can find another one. Here's a gap from this price to that price. And what we're looking for is opportunities to fill that gap. And when we say fill the gap, we mean for the price to come in and fill that space. So the first thing that we always want to do is we want to understand and recognize where the stock is trading on the daily chart, because the daily chart is going to give us our overall direction before we trade a gap on a smaller time frame. So we want to come on the daily time frame. Let me just put a line right here because that is an area of resistance. So we want to come and mark our areas of support and resistance on the chart. And I'm going to just change these colors to green because this is actual support areas here. There we go. Now, so looking at our chart and where it closed, we can see that on this day, we have an inverted hammer off of the 50 simple moving average, and it is nearing our buy zone. It's actually on our buy zone. So for this day right here, we notice that the market opened up near the bottom of our buy zone. I love to see an opening near the bottom of our buy zone because to me, that's indicative that the price will more than likely go up. So now that we have an idea of where we are on an overall, if you could just picture yourself in a maze. When you're in a maze, it's like the turns and the directions are not really clear. So you're just kind of going from left to right until you find your way out. But what if you had a bird's eye view to see exactly which way to go in the direction of that maze, which way to go to get out of that maze? If you had a bird's eye view, then you probably wouldn't be so frustrated while you're in the smaller, when you're in the zoomed in part of the maze. And so that's what coming to the daily chart does. Coming to the daily chart helps us to see a bird's eye view of what the market is doing as it relates to overall direction. So now that we know that we are near the buy zone, we want to go to our 5-minute chart and identify our gap. Now, you could not see the gap on the daily chart, but you certainly can see it on the 5-minute chart. What I did was I took off the extended hours that QQQ trades, and you can do that on all of the stocks that you trade. All you do is come up here, hit this sun, go into equities, and uncheck show extended hours trading session. Just uncheck that, and it'll give you nothing but the US trading hours or the price action during the US market. So I can see right here that this candle represents the end of the day where the price actually closed for that day. But look at where the price opened on today. And I have an inverted hammer. So we understand that an inverted hammer can signify that the price of the stock will be moving down to fill the gap. So in that case, if we see an inverted hammer on the first candle of the day, then we will look to enter in on a put, and we're going to calculate our risk by saying, if I enter in on this put, and I want you to start saying that aloud, because this is how we're going to annihilate fears. We're going to say, if it closes above the high of this candle in the opposite direction, if this candle was to push all the way up, close above the high of this candle, we're going to get out of the trade and take our loss. Simple as that. Because we understand that in trading, there will be losses, but smart traders have managed losses. Now, where will we be taking our profits? We're going to take our profits right down here at the gap fill. Number one, we have a gap fill right here. We have the 50 curving under, and we have a pattern that closed above our gap fill. So once the market had accomplished its goal of filling the gap, we had a push out of that area, a pullback, and this is where I would say you would enter that trade and look at 380. So your strike price would be $380 strike. And look how much of a move we got from that area. That's an $8 move. So if our delta, which I believe the delta at that time was about 52, if we have a delta of about 52 and the share price moved $8, with one contract, that's $416. Okay, not a bad day at the office. And you can even set your stop to get out at a certain profit target. Now, with this trade, with this setup, seeing this pattern, seeing that the pattern closed above your gap fill, where would your exit be if this trade doesn't work? You would get out of this trade if it closed below the low of this candlestick pattern. And you call it a day. You can also take profits somewhere around here where resistance first started. You can certainly do that, but keeping in mind that we're already at a buy zone. We're at a buy zone on the daily chart. This is a great opportunity to see how this trade is going to play out. Some of you are desiring to ride trades. You're desiring to stay in a little longer so you don't have to do so much trading through the week. You can just trade this one day and be done. Because guess what? With that same move, that same $8 move, 5 contracts, that's over $2,000. That's your money for the week. You know, I mean, those are just the numbers. All right, so let's take a look at yesterday. So the first thing we want to do is we want to go to the daily chart. We want to look at the fact that we've got an inverted hammer hanging off of this 50, which could indicate a downward move for the day. But keep in mind, we are near this buy zone. Plus, look at where this candle opened. This candle opened right here near the bottom of our buy zone. So are we going to be really looking for a sale opportunity? I don't think so. We want to be looking for a buy opportunity. Whenever we get the opportunity to get in, we want to be looking for a buy opportunity. So this is where the market closed at on this day. But then look at where it opened at. It opened up right here. And this was near our buy zone. So at the first chance we get, we want to make sure that we're not trading so rigid that we don't understand market structure. So now look what happened when the market came to this buying area. This is how we put all the pieces of the recipe together. We're using the daily chart to see where we are on the overall picture of things. And then we're going to use our chart to determine, our 5-minute chart to determine where we are on a smaller time frame, where we are at the present time. All right, so you can enter, as the market opened, it kind of went sideways, just went sideways. It ranged. And how do we play ranges? We buy the lows and sell the highs. But of course, keeping in mind that we're looking for buy opportunities, we would only sell the highs for a scalp. This is not a trade that we're thinking, oh, the market's getting ready to drop out the sky, because that's just not the case. So right about here, when we see a nice bullish pattern here, this is also called a piercing pattern because the opening of this candle opened below the close of the red, and the close of the green is halfway or above of the red candle. So that's a strong reversal candlestick pattern. And as long as we don't get a close below the low of this candle, we can stay in the trade. Now, you did get a small little close here, but that would not have been enough to get me out of the trade. So as the day progressed, it just kind of moved sideways, and then it finally caught its legs, got up above this 50, and went up, and then of course led us into today. Now look at how this gap started right here at this gap fill. So even though on this particular day it didn't fill the gap that it created the prior night before, it filled it here. And just like a Final Destination moment, anybody seen that movie Final Destination? Yeah, they'll try to escape death, but death always comes back and get them. Same thing with here. So the gap fill, that may have been a bad example. I know y'all Christian folks. Y'all say, oh, I just rebuke death. Amen. I rebuke it too. Untimely. But I want you to look at that. That gap said, we're going to fill, but then we're coming back and getting you too. We're going to come back and get you too. And then, of course, you had your move up. Okay? That's how we play the gap. That's how we take all the information that we have and we trade accordingly. First of all, we're going to go to this daily chart, and we're going to say, this market is at a level of resistance, or this market is at a level of support. I'm going to be looking for a sell opportunity. All right, let's look at another stock. Let's look at Amazon. I love Amazon. The reason why I love Amazon, because it pays so well. All right, so looking at the candle from yesterday, it's right here on support. Plus, I got a double bottom here. Every time it came to this spot, it just kind of bolstered up. So with this candle, I had an opportunity to get into the trade at this level. But let's look at today. Let's look at how Amazon filled the gap on today. So knowing where we are in the maze, we already know that we're looking for a buy opportunity regardless of what Amazon is doing. Amazon sold off this morning. This is where our gap is. So from here to here told us that we had a gap up in the market this morning. Had an inverted hammer. So if you wanted to scalp Amazon all the way down to the gap, then you certainly could have done that. And then some, got a little bit extra. But look what happened when we got our buy signal, which came in the form of a hammer. You all know I love hammers. I love hammers. And not only that, we got a double bottom. So it pushed up, pushed back down, was unable to take out the low of this hammer, which is, by the way, where we will get out of the trade should the trade not work. This is where we will get out of the trade. Now, here's my fear with, here's where my fear used to be with Amazon. The contracts are fairly expensive. And so I would say, oh my goodness, I'm gonna lose all of this money. That is a lie. I'm not gonna lose all of the money. I'm only going to lose a portion of the money if the price closes below this candle. As long as the candle, as long as it doesn't close, as long as I don't allow that trade to run on in a losing position, I'm going to be okay. Because guess what? If I pay $3,400 for the contract and I lose $500, then I've got the remainder of that money left to do something else with. I take my loss and go on. So you have to learn how to answer those fears, address those fears, so that you can take the irrational tone out of those fears. Okay? All right. So we got a double bottom here, and that's our entry point. Just because we have a hammer here giving us our indication, it's already filled the gap. So it really didn't have a reason to go down. Plus, we're at an area of support. Here's our yellow line where the daily chart is. Hey, it's a buy. If you did not feel comfortable buying there, you can wait until you have a break and close above your gap line and a pullback and a pattern, and it's a go. Y'all, I can't even tell you how much money that is, because from here, I'm just going to say from the opening of this candle here, from 33.44 to 34.94. Well, 34.94 is right up here. That's a $50 move. Who couldn't use a $50? Oh, it just pushed up for me. Who couldn't use a $50 move? Just making a trade off of that move. So that's how we play the gap. So you're either going to have a gap fill, or you're going to have a gap and go. A gap and go is, let's take a look at CarMax. So a gap and go is when the stock gaps down, well, like this stock gapped up, but it did not fill the gap. The price shot up and it just didn't fill the gap. And that's okay, because you can still utilize your first 6 candles of the day, which is right here. And did you get a pattern? Yes, you did. You got a retest to this area. You got a bullish pattern. This is where you will enter that trade on up to the upside. Okay. Also, let me mention, if the market does not fill the gap within the first 30 minutes of the market, and this is why those first 6 candles of the day, I really love trading those first 6 candles of the day, because it kind of gives me the direction of the market. But if the market does not fill the gap within the first 30 minutes of the day, then you can utilize your first 6 candle method. So clearly the market didn't fill within the first 30 minutes of the day. So that's kind of telling me the intention of that stock. Let's look at Nike, because Nike is gapped up on earnings. That's a huge gap that we had on Nike. So we've got, not only do we have a daily structure area here, get that off of there. But here's where Nike closed on yesterday. So if you got in this call, then you were looking pretty today. Nike had a gap up, which means we will be expecting for Nike to come down to fill the gap and then go up. But you see, Nike did not do that within the first 30 minutes. So because it did not do that, then you would not take that trade. You would not take that trade for a gap fill, but you could take it for the first 6 candles of the day. So 1, 2, 3, 4, 5, 6. This is our 6th. This is our lowest body. This is our lowest wick. Now, did we get a break and close below our buy zone? Yes, we did, but keep in mind, we are already at an area of support. So once we had a break out of that area, you could buy it either here or you can wait for the breakout, pullback pattern and get in that way. Now, quite frankly, I probably would leave Nike alone. I would not have, I don't like that. That's just ugly. It's really no kind of pattern, no rhyme or reason. There's no retesting of this area. I don't like it. So it would not be, a lot of times when stocks gap up real high like that, they really don't do much on the next day, but go sideways. And that's exactly what Nike did. It just went sideways. So I'm not going to hold this video long. I just wanted you to understand how to enter, where to exit, and how to recognize a gap trade. This may be a strategy that you want to employ, and you will certainly be successful in it because it's not a real difficult, trade for you to do. So if you have any questions, just leave those questions in the comment. Don't forget to like and subscribe to this channel if you have not done so. Also join our Facebook group, Water Walkers, Trusting God, one hearing and trusting God, one trade at a time. If you fill out the questionnaire and mention that you heard about this group from the YouTube, I'll let you in the group. This is a private group. I am very protective of the people that are in this group. So we don't have a whole lot of hype in this group. We are just some believers who are trading the market, and we're growing and we're learning how to trade the market and get out of debt and build wealth and become successful at this thing called trading. So I invite you to come and join us on our journey. Right now, we're in the middle of a $500 in a day challenge. And I've included a video in there with 2 other strategies that you can use to employ to make income. So I invite you to join us. I hope you all have a wonderful day learning and growing. Merry Christmas. And I will see you later. Bye-bye.